For entrepreneurs trying to figure out which accounting and finance professional you need can be a daunting task. In this production, we will be exploring how the different financial professionals can help you and your business. We will focus at a high level on these different roles. First, a bookkeeper or accountant. Second, a chief financial officer or CFO. Third, a personal financial planner or wealth manager. And last, a certified public accountant or CPA. I am recording this as a podcast episode, and I am also producing a video on this topic. If you find this episode as a podcast, on the video version, I have a diagram that I am referring to as a visual aid. You can find the video on the Courbridge YouTube channel, and that is spelled COEURBRIDGE. Also, on the YouTube channel, the visual aid is available for download in the description area of the video. Now let's go through what you need from different financial professionals using the phases of business development as context. At the business startup phase, you will definitely need a strong bookkeeper or accountant. A bookkeeper will help you set up your books, make sure you are enrolled with all of the tax agencies, and handle a lot of transaction processing for you. They will ensure that you comply with tax reporting and payments. Since business owners may not have a lot of accounting expertise, this financial professional can be very useful and help you sleep well at night. It is wise to consider starting with a bookkeeping service which can scale with you and has the deep expertise to help you get started on the right path. This will be critical as you grow, and you will need solid bookkeeping to support your conversations in the future with bankers. Depending on your bookkeeper's expertise, you may also need a CPA for your tax strategy and advice. For example, a gaming technology startup company had a CPA recommend a tax credit that was focused on technology-based companies. The CPA helps not only with business tax strategy, but also personal tax strategy. For business financial management, you may look into engaging a part-time CFO or even a free CFO that is a retired executive working through the Small Business Administration. At the Small Business Administration, these retired executives are part of their SCORE program, which stands for Service Corps of Retired Executives. You can find this resource easily by Googling SCORE of the Small Business Administration. In addition, if your small business needs funding, the financial section of your business plan becomes very important, and any of these professionals that I have described so far may be able to help you with that important activity. During the business growth phase, your business is starting to be recognized by customers as the go-to place for your products and services. Your revenue growth is taking off, or you're deciding that you want to expand into new markets or expand your product lines. A personal financial manager or wealth manager can help you develop retirement plans and strategies, establish retention plans for employees, and evaluate and establish executive compensation plans. A CPA will continue to help you with tax planning strategies through all phases of the business. The more you grow, the more value you may get from a part-time CFO. A CFO will be instrumental in helping you to assess opportunities for growth, including new investments, new product launches, even mergers or acquisitions of other businesses. A CFO can also help you with funding needs as you grow and can help obtain financing through debt structures or equity offerings. Throughout these phases as well, your bookkeeping needs will expand to more sophisticated accounting and analysis. A bookkeeper will keep your books accurate and up to date, but as you grow, you will want to understand your operations better. A bookkeeper or accountant may have the skills to help you build robust financial statements that can help you know the financial levers of your business so that profitability and cost management are integrated into the growth and expansion plans. As your business matures, tax deferral options for executive compensation and cash management options can become important to you. In addition, there are ways to earn higher interest on cash deposits if you have larger amounts of cash that you're holding. A wealth manager, CPA, and CFO can help you with important strategies around this, as well as help you assess how you may want to eventually sell your business. The bookkeeper or accountant is still helping you keep your books and may be managing a staff of other financial professionals for you. All business owners should think of their company and their financial information as a valuable asset and acknowledge that they will someday sell it, turn it over to another owner, or close it. Make sure you are discussing this with your wealth manager. If your CFO or other financial advisors have expertise in business transitions, it is never too early to start planning. As you can see, every business has a life cycle and many phases that it goes through, and every business owner is well advised to understand where they are in the life cycle and where they want to go. Consider talking with friends and fellow professionals to see how you can leverage financial expertise to help you transition through the different life cycle phases. Any financial professional you use are often well connected to a network and can help in referring you to other financial professionals. Each of these resources, depending on their expertise, will have varying fee structures. So early on, you will likely start out with an accountant that is much more transaction-based, and as you grow and evolve, bigger, more strategic questions will have to be answered. I wish you much success on your business journey and hope this helps you navigate the financial world.